Good morning. Welcome to the E3 Live Market Report. I'm Pat McClatchy. We will comment on the export figures that just came out and look at the reaction of the market. Then we'll move on from there and talk about what's happened in the markets over the last week and look forward in anticipation of what we think could happen over the coming days. Let's look at where the markets were just before these exports came out. July cotton was up 57, December cotton was up 48. July soybeans were down just before this report, down a half. November down a quarter. July corn up 2.5, and the December corn up 2 3/4, and July wheat was down 3. Let's look and see what we've got with this report on the highlights. The numbers that are coming out so far are some economic releases. Consumer spending has come out. Those numbers come out first. Any second we will have our export figures coming out. No reaction yet for the market as we continue to wait for these numbers. Looking here, we've got a very large number for cotton, and this is a surprising number, should have a positive reaction to the market. 117,500 bales are what we're showing for cotton. Looking at soybeans, the soybean number was 322,400 for metric tons for the soybeans. Looking for corn, 654,600 were the export sales for the corn market. Wheat was a low number at 42,500. Let's look at the reaction of the markets. Cotton has reacted in a positive way off this bullish number. July cotton up 81, it's trading at 65.14. December cotton is up 59 at 65.65. Looking over at the soybean reaction, the number, as I mentioned, we were down a half. We were actually down a half cent in beans. Now we're up a penny in the July beans and up a penny in the November soybeans. July corn up 2.5. We were up 2.5, so no change there. December corn up 2.5. We have right now July wheat down 2 3/4 at 486, and that, as I mentioned, we haven't moved much. We were down 3 in the wheat there. Looking at the breakdown I have here in front of me, let's first go to cotton. 117,500. That's up 98% from the previous week and up 86% from the 4-week average. Vietnam took 40,700. Turkey took 29,600, and Hong Kong took 9,200 bales. Shipments of 339,200. All these are very, very good numbers. Let's go to soybeans, 322,400. That was up noticeably from the previous week and up 28% from the 4-week average. China took 198,000 metric tons. The Netherlands took 85,700 metric tons, and Germany took 66,600 metric tons. Corn numbers, the corn number 654,000 metric tons. That's down 19% from the previous week and down 8% from the 4-week average. Japan took 211,100 metric tons. Saudi Arabia took 158,700, and Mexico took 90,600 metric tons. Wheat number, and our numbers in wheat have for some time been small, but 42,500, that is a positive number. That's down 43% from the previous week, down noticeably from the 4-week average. Guatemala took 28,800. The Philippines took 27,300, and El Salvador took 7,200 metric tons. Looking at the reaction of the markets since we've given it a few minutes since these reports have come out. Cotton up 76 in July. Soybeans are unchanged. Corn's up 2.5, and wheat's down 3. Let's talk about what's happened this week. On Monday, we had our export inspections, but we also had, more importantly, the planting progress and crop progress. Let's go over that. Starting with corn, 92% of the crop was planted as of Monday, and that's through Sunday, versus a 5-year average of 88%. Corn was rated good to excellent. 74 to 78% of the crop was good to excellent. Soybeans, 61% of the crop was planted on the number Monday. The average is 55%, and 32% has emerged. Both corn and beans are off to a very good start. Spring wheat, 96% is planted versus an average of 79%. Cotton, 47% is planted versus an average of 61%. So we're behind because of the weather. We're behind the averages there. I want to read from analysts. If I see comments from analysts that are noteworthy, I like to go over those. This is from Bruce Knorr with Farm Futures. I'll just comment on what he has to say about grain. In corn, he says, with the crop off to a good start and futures making new lows, prices may keep falling into early June, if not longer. Forecasts call for no threatening weather, so the best hope may wind up being an early harvest low. Soybeans. Unless weather cuts production, supply should remain burdensome unless the 2014 crop was significantly smaller than previous estimates. Even that prospect isn't all that bullish, with large supplies all around the world. In wheat's brief spring rally may be over. We continue to recommend incremental sales of winter wheat on rallies. My comments and thoughts on cotton. A very wet West Texas has caused planting delays. June 5th to June 10th are important deadline dates for crop insurance. If the crop is not planted by then, it could start affecting some acres to cotton. We had thought we would get this crop planted. Still think most of the crop will be planted in West Texas, but some significant rain in the last few days in certain parts of West Texas and that cotton producing area are creating some significant problems for farmers that just yesterday morning thought they were confident they would get that crop planted in their counties. Now they're not so confident. Analysts feel that the cotton is in a trading range, anywhere from a low in December cotton of 63.50, 64 area, up to as high as 67.5 to 68. And the trading range, according to analysts, should contain the market. Things change, could be changing weather in other parts of the world that grow a lot of cotton, could be a significant change in the value of the dollar. These things can affect the market and take the market outside this trading range. I got a text just minutes before our broadcast from a farmer about 20 miles north of Lubbock who was the most confident person I know in getting all of his crop planted before the significant insurance dates, which are June 5th through June 10th. And now he's not so sure they're going to get their cotton planted. He said they've had a real washout in their area. And even though next week is going to be a dry week, this creates some problems that were not even anticipated just recently. Let's talk about seasonals. We always do talk about seasonals, but I want to go over these, be a little bit more specific. I'm looking at a seasonal right now, the seasonal historical pattern for soybeans, November soybeans. And I see typically as we look at both the 5-year, 15-year, and 30-year pattern, the soybeans have a tendency to top in a broad area of May, late April all the way in the first part of June. So we're in that time frame right now. We have a tendency to make our highs for the year then. Then we sell off usually right around the first part of August. After that, we rally for about a month into the first part of September, and then we start rolling back over and see the low for the year sometime in the area of the first part of October. That's the seasonal pattern. And where we are right now, well, we're at that time when we're usually rolling over. So the market's already rolled over and started selling off much before this time frame. As far as suggestions on pricing for farmers and their cash, we would suggest pricing on rallies that could be created by a weakening dollar. Right now, the dollar is down about 47 on the day. If we can see a good sell-off in the dollar in the coming weeks, it definitely can help bounce all of these agricultural markets. But a rally toward 940 in November soybeans could be a place to look to do some pricing. Right now, November soybeans are at 902. Let's talk about corn. The high in corn is usually made somewhat similar to soybeans. Highs are made in the spring, anywhere from April to May. We usually then have seasonally a low that takes us into the period of right at the end of July, 1st of August, and get a bounce for a few weeks. We roll over again in the 1st of September and sell off right into the first part of October. As far as pricing opportunities, look for that market maybe with December corn right now. December corn right now is trading at 379. A rally back toward 390 might be an opportunity for farmers to do some pricing. July wheat. The July wheat usually makes its high in mid-May, so we're just past that and has a good sell-off into the last part of June. Those are the seasonal patterns for the market. As far as pricing opportunities, July wheat right now is trading in the area of 486, and a rally into the area of 520 to 540 would be probably an excellent opportunity to do some pricing. We've already talked about cotton as far as pricing opportunities go, but highs are usually made seasonally in cotton in April to May. Then a low is usually made in mid-August. We bounce for about 3 weeks to a month into mid-September, and then we have a tendency to sell off into the middle of harvest, sometime in the last half of November. So that's really it for our exports, the reaction of the markets. Okay, we need to update that. I look at soybeans. The cotton right now is up 145 points in July. That puts it at 65.78. We've actually been about 6 points higher than that. So we're at 65.80 right now in the market. December cotton is up 99 at 66.05. Significant rally in this market. Farmers need to be alert for pricing opportunities on this rally, because we still think the cotton market is probably a broad trading range. The weather in Texas is creating problems. Plus, you see an outstanding export figure this morning, both positive for old crop and new crop. Soybeans are up a half, corn's up 2 3/4, and wheat's down 3. I will make one other comment, and that is that next week I'll be on the road. I'll continue to do our daily broadcast. We will be archiving those as we usually do. We don't think we'll be able to do a live streaming broadcast, but we'll have them up very shortly. Thanks for being with us today at the E3 Market Report. Join us next week. Thanks.